Mike Tedeschi, Portfolio Manager over at Perspective Wealth Planning, wrapping up this week's earnings on Friday before the bell. We've got a couple of oil giants, Exxon Mobil and Chevron, which report. We have Abbvie, Weyerhaeuser, AstraZeneca, and Colgate-Palmolive that we are going to take a look at in today's video. Now, first up, we have Colgate. Now, this is a chart that I really like because of how clean it is. All right, I have a 10-year daily chart up on the screen, and you can clearly see the importance of this price action zone between 72 and 76, and then you can also see that clear price action between that 83 and 86. So up here we've got our resistance zone, and down here we clearly have our nice support zone. We've been trading basically inside this range for about a year and a half. We're going to be right in the middle of this zone as we head into earnings, right about that $80 mark. So we have two very, very clear levels that we can pay attention to. A move above 86 would be extremely bullish. A move below 72 would be extremely bearish. If we stay inside this range, not a whole lot of interest until we get either above or below that. But it's a very clean chart. The levels are very obvious when you take a look at it. Next, we'll take a look at AstraZeneca. Now, AstraZeneca had a breakout here above 64 in March, ran all the way up to 71 and came back. This is that classic breakout potential back test of the breakout zone. Bulls definitely want to see that breakout zone of 64 hold here and head back higher. A move underneath would then change this chart from a breakout and a back test to a potential fail breakout. This is a zone and a range that it's traded in for a number of years, so holding above 64 is really, really key for AstraZeneca. Next, I want to take a look at Weyerhaeuser Lumber Company. We all know how much the price of lumber has gone up here over the last few years. Again, 10-year daily chart up. The highs that we had back in 2018 were taken out last year. We were unable to hold above that, but you can see the importance of this 36 level from this original breakout back in here. Yes, this ended up being a failed breakout, but we back tested it right here, it failed. We back tested it right here, it failed, and then when we broke out, we held it, and we held it. So 37, that 37 zone, probably all the way down. Again, this is a zone, not one point on the chart. It's probably a zone that looks like this. This whole area all the way down to 35 is that major key support level. Now, if we zoom in on a closer time frame, right, we had a new breakout to all-time highs right here at the end of April. We've fallen back a little bit. I would look at the breakout zone really between 40 and 41. As long as we hold over 40, that does kind of open up the move higher as a potential here. If we fall back underneath 40, you get the first area of support at 36 and then below. I'm really interested to see what the forward guidance this company has to say on earnings. Next, I want to take a look at Abbvie. Abbvie has been a clear leader so far this year. Clean break to all-time highs back in December of last year. I'm going to zoom in on this chart so we can get a cleaner picture here. We had that breakout. We back tested it here in January, and we have continued to head up ever since then. We had some really 3-4 explosive days to the upside, gave most of that move back, and have now kind of been trading sideways here recently. This breakout zone is really between that 150 and that 152, so we can look at this as a breakout, a potential back test. Bulls really want to see this zone hold, want to see it get up over 160, which has been the ceiling here over the last 2 weeks, for that potential move back to the upside. All right, so those are going to be the levels we watch. If we do fall below 150, our next real zone of support comes back down about 136, which was that breakout from the last earnings that they had right there in the beginning of February. Now, we know that the oil and gas sector of the market has really been strong so far this year. You've got Exxon Mobil year to date is up 38%, so clear leadership against the markets as a whole. I want to back this up, and I want to look at it in on a monthly time frame. And the reason I want to go this far back is I want to look at major price levels. We can see the importance of this zone from really right up here at 90 to just over 100 has been decade-long resistance. And we also can go back to that low that we had during the pandemic, and we can actually see going all the way back to the mid-90s, that 30 area was support. So really since 2004, we've traded basically in between 30 and 90, very little time outside of that zone. We tested that 91 area here this year, have come back off a little bit from it. There is a lot of overhead resistance on this chart. Yes, it is a leadership area. We really need to see this back up over 91 for it to get really interesting for that next potential leg higher. And the nice thing that we do have right here is we still have a series of higher lows that have been put in since the beginning of this year, as you can see. So bulls have been stepping in quicker and quicker and quicker each time. So we kind of have that resistance zone 90 to 91.5. And we've kind of got that support of higher lows back down around that 80 to 77 zone. That's the area that we're really going to be paying attention here to Exxon Mobil. Last but not least, we'll take a look in at Chevron. All right, I want to back this one up and look at it from a longer term picture as well. Chevron has no overhead supply. This is trading at those all-time highs. Clean break the beginning of this year over that 128 to 130 resistance zone and has pushed very nicely from that point. Now, we have a clean area of failure right at 175, and this is what we're really paying very close attention to on the upside. On the downside, we really don't have much support or price action support until we get back down around that 140 zone. You can look at this area right here and pick the middle of the range, and actually the middle of the range is about right where we're trading at, as you guys can see here. It's at 156. You really kind of want to hold the most recent low at 151 after earnings, and you like to see it get back up over that 175. For the long side, and if it falls below that 150 zone, that was most recent lows, you're looking for that potential back test of that support zone in between 130 and 140. There's a very clean looking chart, really strong leader in the energy space so far this year, and no overhead supply, so it's going to be really interesting to see what happens before the bell on Friday. As always, I hope you guys found this information useful. You can reach out to me at mtedeschi@perspectivewealthplanning.com or give me a call 814-580-9881 if you guys want to talk anything about the overall markets. I will see you guys tomorrow. Take care.